Hi, this is Jack from Alpha Charts with a state of the market video. Today is July 8th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please go ahead and give a like and subscribe down below. Really does help me out. Appreciate all of those subscribes and likes, and thank you all very much for supporting me with that. So appreciate it. All right, and before we get started with this, I want to just make you all aware. Trader Lion is doing their annual stock trading conference starting Saturday, July 9th and 10th, also on the 16th and 17th. So it's a 4-day event, right? Completely free. Starts tomorrow, Saturday, and just real fast, look at these speakers. I mean, you have Jack Schwager, David Ryan, Mark Ritchie II, Denise Scholl, James Ropel. I mean, right there is like amazing, right? But it keeps going. I mean, just investing champions and psychology of markets. I mean, Brian Shannon, John Boyk, Eric Wish is all on there. Anne Marie's on there. Leaf, Matt Caruso, Tom Canfield, and Tom Basso, right? I mean, just amazing group of people. I'll be presenting on some of my scans and actually on state of the market on what each individual thing means to me and why I use it in my state of the market, as well as scanning and top downs and bottoms up. But again, Christian's on there, Scotland, Pat Walker, just absolutely fantastic group. Finally, I want to watch Ray present. That's gonna be amazing. Joe Fami's on there, Amy Smith, and I think there's a couple more that were announced as well. But just a truly fantastic event that's happening. It's completely free. Traderlion.com annual trading conference. You can see the URL up here. I'll link it also down below in the notes or details, whatever they're called, down below. Okay, so they'll be down there as well. The link to this page, and just yeah, definitely don't miss it. It's gonna be amazing. All right, so let's start with state of the market. SPX, like we normally do, and as you can see, price held where it had to hold, like we talked about last week, right? That was an important spot, and the higher low so far has held. Now, no higher high yet, right? So we don't know what that's going to mean, but we do know that now this is the most important area right here. And I could even, do something like this, right? Because right now, this is the part that has to hold. You still have bearish alignment of all moving averages on all time frames. So we got to keep a perspective on where we're at with this. But SPX, again, held where it had to, pushed up. Volume is July volume. I'm not going to make a big deal about volume right now. Would I love to see more skyscrapers? Absolutely. But am I, is this a deal breaker? Not yet. Looking at RSP, yeah, the same type of idea. And on the week, I just want to see something on the week. So 1.24 on the week. Now this is Friday morning, by the way. And again, the SPX is more, so the cap weight, the caps, big caps, mega caps are carrying it a little bit. By the way, I am making this video 9 a.m. on Friday morning. I have plans this weekend, so I won't be able to make the video. So we do have one more day left in the trading week, and market's down today. All right, but again, it's a nice looking move. Let's see what the Qs did. And you see the Qs are pre-market kind of dropping, but again, the higher low is holding, and so that is the new area of interest, right? You have the 50-day right above this area. You have the nice crossing on the shorter term moving averages, 300, right? So 298, 299, 300, somewhere around there. That is, we'll call it 300. That is the important area right now, right? We will make a higher high. That's important. We'll be above the 50-day moving average. That's important. We'll have bullish crossing on the shorter term moving averages. That's important. They'll both be moving higher, hopefully crossing bullishly the 50-day. That's important. So Qs, which has been, and 300, has been the area where supply has been found in the past, right? Supply was found, supply was found, supply was found, broke through, became support, came back down, kind of muddled around in this area a little bit, and now, found supply. And right now, pre-market, we're finding supply here again, but we'll see if it makes another higher low, which would be great. And then we could bust back through above 300. And that would be definitely the bullish scenario, right? That's the point where I say, okay, good chance that bottom is in. We can manage risk against that 300 level in the 50-day moving average, and things will start looking good again. QQQE, equal weights. So it actually touched the 50-day already. Got rejected. It'll probably come down some, at least at the open. But again, looks pretty bullish. Out of the get-go, if it can make it above the 50, held where it had to, made the higher low basically right there. Got to get above the 50 though. Got to get above that 50 and hold above the 50 and start to get 50 to start to flatten out, and these 50 and these shorter term moving averages to flatten. 50 days ago was right here, this bar right there. So as we kind of get rid of these bars right there, you got to figure that. Let's do one more thing here. It may take, if price moves higher, another, we'll call it a week to 2 weeks for that 50-day to flatten out, right? Depending on how much price movement is. But either way, we know our levels, right? We want to make sure that one, this higher low doesn't get taken out, and two, we want to see price get above that 50-day, right? We don't want to see it implode or anything like that. Okay. Next up, we're going to do the IWM. Again, super important level, and IWM held it, right? I'm gonna call that holding level. There was a gap, it got filled, kind of undercut it, and then boom, right back up. Looking good there. Still below a declining 50. It looks like it wants to do a bullish cross right here. It hasn't done it yet. Again, so we still have bearishly aligned moving averages. Let's not get the cart before the horse. But again, price making a higher high and above that 50-day, same story as the other two indexes. That is the bullish scenario. So that's what we got to watch out for. And now this low, we'll call it, 166, 167 needs to hold, period, for the bullish case to be intact. The growth ETF, small cap growth. Now look at the difference. Here you go. Price got above the 50-day, which is the first time we could say that in this video. And so that's a big deal. That bullish cross is imminent, as long as price stays, above 210, right? That bullish cross will probably happen. Doesn't mean that it's the end all be all, because it happened here and it rolled right back over. And let's be honest, the IWO small cap growth is again testing supply from the underside, right? And right now, lower highs and lower lows are still being made as of the second. So what are we looking for? Obviously, price to stay above the 50-day. That's number one. Next is to get through this congestion supply area right here. And so we want to see that above 226, 227. And in that area, we would have a much more bullishly aligned short to intermediate term trend. Still declining longer term trend, and that will be the next thing we would have to deal with. But as of right now, looks better than most, which is what you want to see. IWO leading on the way out, right? It led down, leading on the way out. So that would be definitely what I want to see. IWO moving higher here. And then the mid caps. I talk about the middies. They actually held up better up here. Never even got to the area of support here. Doesn't mean that they won't. Again, still bearishly aligned everything, right? But it still has a higher low in place, and that's the same for all the other ones. So there's your mid caps, right? Let's go to our ETFs. XLF. XLF. Okay. So what's the theme? Held where they had to. And I got to go to weekly for this one, right? Because we're going back to 2007. right? Again, I show this every week because it's so important. Right there, 2007, right? 2008-ish, 2007-ish, 2018, 2020, bust through, held right there. That's a 200-week moving average right there. If you care about that, well, then it's holding there too, right? That's right where it had to hold this 32 level. Let's scoot down to a daily, held higher low. Again, as long as this area holds 30, we'll call it 30, 50-ish, 30, 50-ish holds, everything's okay, right? We just move sideways. If you lose 30, 50 on XLF, I think things are going to get really, really nasty. SMH. All right, SMH. All right, so let's say the bear case, SMH being very, very important, and it broke down from an area I identified as potential importance, and it's not leading out of here, right? And it looks like there's gonna be a little gap down this morning, and everything is still screaming lower with lower highs and lower lows. If we were really out of this bear market, or at least trying to make bottoms, wouldn't SMH be kind of more leading to the upside? And we're just not seeing that. So that's a problem. Transports, XTN. Okay. Transports held where they had to, right? This area of supply right here, resistance, 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 support, support. And now is this area going to be support again? So far it is, right? So far it is. Going in closer to this one. Yeah, not leading, but it hasn't broken down yet. Okay, so that's definitely something to watch. Home builders. Going back again, we gotta go to a weekly chart, like back to the housing crisis of 2007, 2006, actually, where it topped. You see it. This is where it came on the market, kind of topped right there. Met it here again, met it here again, and then it finally broke out, peaked, and now it's coming back down again, right? And zooming in again, this is XHB, the home builders, higher, lower highs, lower lows all the way. Again, it looks a little bit better than some of the other ones. So home builders recouping, that's I guess a positive somewhat. Still needs to get above that 50-day right overhead, but looking a little bit better. Again, we'll see if it continues higher, if it comes back down and then makes a higher low again. That'd be fine, right? That'd be healthy. We'll see what happens. Nothing goes straight up. And the VIX is below 27. Again, market has been better. It's more trending of a market, right? So let's see if we get continued VIX below 27. Continued VIX movement below 27, no matter what the indexes did, means that we're more in a trending market, which is why I'm looking at this this indicator. And if we're in more of a trending market, I think then that's one that we can make some money off of. At least I can make some money off of. So definitely that's a positive below 27, just barely. But we'll see if we can come down here in more of the 24, 25, 22, 21 area. Moving on after VIX, bonds, right? Bond spreads, credit spreads. So what do we want to see here? We want to see credit spreads narrowing. So we've had the higher highs and higher lows all the way up. Nice little move down here. Can we get more sustained move down? That's definitely the bullish scenario, right? You can see pre-market, it looks like we're going to get some pushback higher. So is this just in the higher low? Or do we want to, or is it going to roll over, hopefully, and we get back into this kind of range, or at least tightening, right? Declining to tightening. Doesn't have to go straight down, but just stop going up, right? Stop widening. And again, I want to show you on a weekly chart where this, these have kind of seen this stuff in the past, right? And give you a historical perspective. Here's 2008 right there, right? You have that double peak here, right? Back in 2011, you had this a pretty good size spike up. You had it again in 2016, right? 2015, really, and it culminated in 2016. And then COVID right over here, We can't forget 2018. Again, this doesn't look like much, but it's a big deal, right? It's really a big deal. That fast movement. It's the fast movement, the fast movement, fast movement, fast movement, fast movement. And here, so far, fast movement, right? So we want to see this just to chill out and kind of look like this on the way down, this on the way down, right? This on the way down, this on the way down, right? That's what we're looking for here. Put call ratio, and right in the middle of everything. Let's go back to daily. Right in the middle of everything. Nothing really to see there. Value line geometric, breadth indicator. Debating whether we need this one anymore in this one, because I like the MMFI better. MMFI has 38% above the 50-day moving average, right? Percent of stocks above the 50-day moving average, 50%. And I like these big moves up right here. Boom, boom. That tells me that a lot of things are starting to recover their 50 and very quickly. Now, let's be honest, things have moved sideways on the indexes for the last, we'll call it month or so. So that's why that 50-day is actually much closer and easier to recapture, right? I mean, just look at the, look at Qs, if you put the 50-day on here, we're just going to look at the 50 down, it's not too far away for even the Qs, the index, to recapture. So most of the stocks on there are going to recapture that fairly easily. Looking at gold next, gold continues to fall apart. And really, March had that reversal, island reversal, then try to a lower high right there in April, and has been declining since. I think it's a positive for the market, right? Gold falling apart, yeah, pretty positive. And then we'll look at Bitcoin, and Bitcoin has been recovering this past week. Even if it's down right now, and everything looks pretty good there. We like to see Bitcoin recover even more. That'd be definitely the bullish scenario. All right, so that's what we got. Don't forget, Traderline Conference. Make sure you guys hit that up. Starts tomorrow, less than a day away, or just about a day away. And as far as my state of the market, I believe that we are in a yellow light scenario. Last week I know it was red, but it's probably more likely yellow last week too. But it's unclear, right? There's a lot of bullish signs. There's a lot of bearish. There's some bearish signs still out there. So keep smaller positions. Keep stops close. I'm roughly 50% back invested again. If things start to stop out, I have my stops in. They'll stay as cash. No big deal. It won't hurt my equity curve by all that much. So some of them are stops are in the money. If not, just underneath that area. That makes sense. And again, it's a yellow light territory. It's unclear. So act accordingly, okay? If you're in cash and you think it's too much, just stay in cash. No big deal. There'll be plenty of upside if this is the bottom, which we don't know if it is or isn't yet. But I hope to lay out the scenarios for both the bull case and the bear case. And that's that. So hope you guys have a great weekend. Thanks for tuning in. Appreciate all your support and likes and subscribes. Twitter at AlphaCharts365. I'm always posting my ideas on there as well. All right, guys, take care and have a great weekend. Bye-bye.